Hey everybody, today is April 21st, and today the market is doing quite well. The market is still open today, and it will close in a couple hours. As of right now, the Dow Jones is up 236 points, the S&P is up 25 points, and the Nasdaq is up 97 points. Of course, this could change within the next couple of hours before the market closes, but so far the day is going fairly well. We had a bit of a pullback yesterday, but right now the market is coming up strong and is making up most of those losses. So the question is, will the market continue higher, or are we going to see a bit of a pullback? Now, before we answer that question, please read the disclaimer, and you can pause this video as you read it. Okay, so right now we're in the middle of earnings season, and earnings season has done fairly well, and so we're seeing a lot of strength in the markets. Obviously, we're in a strong uptrend since the pandemic tanked the market last March, and in previous videos we talked about how even in a bull market, it's healthy to see the market pull back once in a while to touch these moving averages, right? We also talked about how these moving averages, which is the silver line is the 50-day simple moving average, the gold line is the 100-day simple moving average, and the blue line is the 200-day simple moving average, right? The silver line being our short-term moving average or short-term support level, the gold line being our mid-term support level, and of course the blue line, the 200-day simple moving average, being the long-term support level. And we talked about how even in a healthy uptrend, it's good to see the market pull back once in a while, right? And I also talked about how we have a gap here, and usually the gaps, well, at least short-term gaps will fill, right? And we can see in the past we talked about how over here we saw the gap fill within a couple days, or in this case, sometimes the gap will take a little longer. This gap back in February took 1 month until March to fill, right? So it is possible that even though we're finding strength in the market, we may eventually, see some profit taking roll over and see the gap fill. Not 100% guarantee, right? There's nothing certain in the market. It's just probability. I would say that the longer we stay above the moving averages, the more likely it is we'll eventually pull back, right? Because the market likes to pull back every once in a while and touch these moving averages before continuing higher, right? And this seems like the next breakout level, or the next push up higher impulse move. But of course, we're trending this Fibonacci resistance level, and usually when we hit these support or resistance levels, the price action will tend to stall a little bit. So we did see a bit of a pullback over the last 2 sessions. Of course, we're looking at SPY, which is the S&P. So we came up above the line and then came down below, and now we're kind of trending. And we're going to see if this price has enough energy to push up higher, or whether we're going to get a bit of a short-term pullback, which of course is not a bad thing, right? If we do pull back, I expect us to touch the 50-day simple moving average and find support and bounce up above, right? If we start moving parabolic, let's say we have really great earnings or another catalyst to push the market higher, we may see something like we did back in September or October last year, where the market went parabolic and then we had a bit of a correction down to our midterm simple moving average, which is the gold line. So this would be a 10% correction. But right now we don't seem to be going parabolic. We had a bit of a pullback over the last 2 sessions, last 2 days, and that is really helping to keep the market in check, which is a good thing, right? Because we want to see this thing go up steady and pull back every now and then. Now let's look at the VIX. Yesterday we talked about in the previous last week how we had a gap over here in the VIX. And I talked about how these gaps in the VIX usually do fill, right? Because the VIX isn't something that just goes straight down. It likes to go sideways and tease the market, right? And then once in a while, we'll see like these short-term spikes in volatility, which will put downward pressure on the markets. And we saw that yesterday. We saw a spike, finally a spike up. And what happened was we actually filled this gap. And that's actually a good thing, because now I'm not as worried, because I was worried that we would just keep going down and eventually we would have a strong spike up, and that could put large downward pressure. But yesterday, although we did see a pullback yesterday, and when the VIX spiked up, we didn't see that big of a pullback, right? The Dow was down over 300 points yesterday, but we did recover and close the day just down 250-ish points, and we're starting to make back that loss today, right? The Dow up 234 points. Same thing with the S&P and the Nasdaq. So the market continues to grind higher, of course, at a steady pace, which I like what I'm seeing right now. But just keep in mind that we do have some gaps, and in the macro term, we are a bit short-term overbought. So we have 4 weekly green candles in a row, right? Usually when we have that many green candles, that's followed by a couple red candles. Like here we had 5, and we followed like 4 red candles in a row, right? Usually we want to see 1 or 2 green weekly candles followed by a red candle, and that's just healthy profit taking, right? The market's doing its natural give and take. Markets give, markets take away, some profit taking along the way up. And of course, we're seeing the RSI hit overbought territory right now, along with the MACD. Not necessarily a bad thing, but just keep in mind that we might see some short-term volatility, right? Same thing with the MACD, starting to head down a little bit. If this thing crosses, we might see a bit of volatility to the downside, at least in the short term, right? Still, I'm long-term bullish. Of course, I've talked about in previous videos how we're still in a secular bull market from 2009, and that last year's crash didn't take us to, I mean, technically we were in a bear market if we're talking about like literal, like the definition of a bear market, but if we're talking about the macro trend, right? We're talking about like decades, we're still in a secular bull trend, and giving benefit of the doubt to the bulls, we should see the price of, or the stock market continue higher. But of course, pullbacks every now and then are healthy to keep us in check, right? So looking at the dollar is also been coming down, and we talked about how the dollar tends to put pressure on the stock market if it's going up, right? So we saw that the dollar rise significantly in 2018, and the stock market had a lot of volatility in 2018, right, this year. Let's look at a cleaner chart. So in 2018, a lot of volatility in the markets and the dollar coming up, especially in March. We saw a huge crash because everybody was selling their assets and wanted to go into dollars. And so we saw the dollar spikes significantly in March. But of course, we saw the dollar come down as we started to print more money, devaluing the currency. And we also talked about how this pattern seemed to be following this pattern in 2018, right? And if we saw the dollar come up, we would see more volatility in the stock market. But the fact that we're starting to roll over right now, right? The dollar is starting to come down now. It's starting to seem like the idea of this happening is starting to seem nullified, right? And this thing could continue to come down lower. And if we retest the support level and break below, that's going to be bad for the dollar. But of course, anything tied to the dollar, pegged to dollar, like stocks, are probably going to continue higher. So if the dollar does continue down, we can see the stock market going up a lot higher. Now let's get treasury yields. Of course, we saw upward treasury yields put pressure on stocks, especially tech stocks, right? We saw the NASDAQ get hit pretty hard over the last few months, as we saw yields starting to recover. So here's the 10-year, right? You saw a strong upward trend, but now we're starting to see a bit of a pullback. And that pullback is giving more strength to NASDAQ, tech stocks, or growth stocks to push higher. And we're starting to see a rotation. Previously, we saw a rotation from tech stock to value stock, which is why we saw the Dow come up so strong, right? But now we're starting to see a rotation from those value stocks back into tech stocks, right? And so I expect the NASDAQ to lead the market again, as it usually does, and for the market to continue to surge higher. But just be careful that it's healthy in a bull market to see pullbacks once in a while, and don't be surprised if this thing ends up pulling back. And sometimes it'll pull back pretty hard, a lot harder than people expect, right? But not necessarily a bad thing. Again, to fill these gaps gives me more confidence that the market will continue to go higher as long as it goes higher on a sustainable pace, right? And also watch out for the VIX. The VIX likes to, again, as I've said many times, go sideways, play around. I expect this thing to go sideways again, right? With short-term spikes in volatility, and that's going to put downward pressure on the market. Of course, not necessarily a bad thing again, because pullbacks will keep the market in check and help it rise at a sustainable rate. As long as we come back and find support on our short-term moving averages, right? These gold and the silver line, and of course the midterm moving average, the gold line. I remain bullish on the market, and I expect the market to continue higher. So that's it for the stock market. Very bullish. Earnings season still going well, and I expect it to continue going well. More people are getting vaccinated every day. I expect the market or the economy to not only recover but to become stronger over time, and the market should reflect that and continue higher. Okay, thank you for watching this video. Don't forget to like this video, leave a comment below, and subscribe for updates. Thanks again, and I appreciate your support. Have a great day.